welcome back to Ledger Pulse, where we break down crypto, macro, and market-moving news so you stay ahead of the curve. If you want clear, no-hype analysis during volatile times, you're in the right place. Something big is happening right now. Global tensions are shifting, Wall Street is ripping higher, Bitcoin just reclaimed a major level, and behind the scenes, smart money might already be positioning for what comes next. Because while fear is spreading across the market, there are growing signals that this could actually be the early stages of the next major move. Let's break it all down. Quick reminder, this is not financial advice. These markets move fast and anything can happen. Always do your own research and manage your risk. Let's start with the macro backdrop, because this is driving everything right now. We're seeing reports that Iran is signaling a willingness to ease tensions if security guarantees are met. Now, why does this matter? Because markets hate uncertainty. And the moment geopolitical risk starts cooling off, capital flows back into risk assets. That's exactly what we're seeing. The S&P 500 surging over 2.5%, NASDAQ up more than 3%, and the Dow ripping over 1,000 points. The Russell 2000 was also up. This is not small. This is aggressive risk-on behavior. But here's where it gets interesting. Crypto didn't immediately explode higher with it. And that disconnect tells us something important. Traditional markets are reacting instantly, crypto is still lagging, and processing liquidity shifts. Historically, this kind of lag can create opportunity, because when crypto catches up, it tends to move fast. Now let's talk about Bitcoin. We just saw Bitcoin reclaim the $68,000 level. That's a key psychological and technical zone. And the way price moved, sharp, aggressive, and impulsive, that kind of move typically signals short liquidations, momentum traders stepping in, and possibly early institutional positioning. But zoom out for a second. This reclaim comes after volatility and fear in the market. So the real question is this a relief rally or the start of a continuation move higher? Here's what stands out. Price didn't slowly grind up. It snapped higher. That usually means liquidity got taken quickly. And when that happens, it often leads to follow-through, not immediate reversal. But we still need confirmation. If Bitcoin can hold above this level and build structure, that's when things get interesting. Now, this next piece might be one of the most important narratives developing right now. A 1.7 trillion asset manager is talking about a new world economy of protocols. And even more importantly, suggesting portfolios could hold up to 40% crypto allocation. This isn't retail hype. This is institutional level thinking. What does economy of protocols mean? It means blockchain networks replacing traditional infrastructure, value being captured at the protocol level, and crypto becoming a core allocation, not a side bet. We're talking about assets like XRP, Solana, Chainlink, Ethereum, and Quant. This aligns with something we've been seeing for a while. Institutions are no longer asking if crypto matters. They're asking how much exposure they need. And when that shift happens, it changes everything. Because institutional capital doesn't move fast. But when it commits, it moves big. Now let's bring it back to the United States, because regulation is another massive driver right now. There's a new bill being introduced aimed at boosting U.S. digital asset mining, creating a certification framework, and even codifying a strategic Bitcoin reserve concept. This is huge, because for years, the narrative has been governments are against crypto. But now we're seeing something different. Governments may want to compete for it. A strategic Bitcoin reserve implies nation-state accumulation, long-term holding strategies, and recognition of Bitcoin as a strategic asset. If that direction continues, we could be looking at the early stages of a global race, not to ban crypto, but to own it. Now, here's where things get really interesting. Data showing signs of long-term holder capitulation, and historically, that's one of the strongest bottom signals in crypto. The idea is simple. When we can't sell, price drops. When long-term holders start selling, fear peaks, and when fear peaks, opportunity begins. One analysis describes it perfectly. The final stage of fear becomes the beginning of opportunity. We've seen this pattern play out in 2018, 2020, and 2022, and each time it marked major turning points. Now, this doesn't mean we instantly go up from here, but it does suggest we may be transitioning from panic to accumulation, and that's where smart money thrives. Finally, let's talk liquidity. Circle just minted 750 million USDC on Solana. That's not random. Stablecoin minting is one of the clearest signals of incoming capital, because before money enters crypto markets, it usually enters as stablecoins first. So what does this tell us? There is fresh liquidity entering the system. Solana is becoming a major hub for that liquidity, and capital is preparing to deploy. This ties everything together. Macro turning risk on, Bitcoin reclaiming levels, institutions talking long-term allocation, governments exploring strategic reserves, and liquidity quietly building. That's a powerful combination. So here's the big picture. Markets are shifting, fear is still present, but under the surface, we're seeing signs of positioning. This could still go either way in the short term, but zooming out, the structure being built right now looks very familiar. And if history repeats, this phase doesn't last forever. The real moves happen after this. If you made it this far, you already know staying informed during moments like this is everything. Markets reward preparation, not reaction. Appreciate you being here, and I'll see you in the next one. And if you're getting value from these breakdowns, make sure you're subscribed so you don't miss what's coming next.